MTN SME Hub. Link to growth. Link to success. Link to the ultimate resource for business advice and insights.
Welcome to the Big Small Business Show, the show for all our wonderful entrepreneurs out there. Coming up in today's show, it's tax season and we're going back to basics with Gas Accounting's George Diab. Oksana Kimmich explains the difference between pitching to investors versus pitching to clients. And we're joined by Tulani Kunene, who will discuss a very sensitive topic, entrepreneurship and marriage or divorce. Welcome back to the Big Small Business Show. Today we are talking all things tax, and we've been talking to George Diab. He's CEO of Gas Accounting, but now we're talking about something probably SARS doesn't want to talk about, which is tax refunds, by getting money back from SARS. And from what I understand is that that's incredibly difficult, and once you do that, SARS says, okay, if that's how you want to play, we're going to make it hard for you. We're going to keep auditing you.
We've seen that, and we see it happen quite regularly, yes.
Okay, so let's talk about what is a tax refund?
Let's debunk the myth around tax refunds, right? So basically, if you're getting a refund from SARS, all that means is you've overpaid tax.
Yeah.
So, and I don't know about you, but I don't like overpaying anything. And I'd rather have the money in my bank account than sitting in SARS's bank account, because as you rightfully mentioned, Allon, when you ask for the money back, there's going to be all sorts of hoops to jump through and a bunch of audits.
Yeah.
So the first place that I'd start is ensure that the tax you're paying is the right amount. So when you get to the end of the tax year, you don't really want to refund and you don't really want to pay anything in. If you get to that zero amount, you've done an excellent job for the year.
Yeah.
However, that's not always possible, because as we touched on in the previous segment, your employer is deducting your PAYE on your behalf and paying that over to SARS.
Yeah.
But on the other side, you've got all these other deductible expenses that they might not be aware of and haven't been included into your tax calculation. Therefore, once you submit your final calculation, you're entitled to that refund.
Okay, but that's from an employer perspective. Is there such a thing, employee perspective?
Yes.
Is there such a thing as a tax refund at a company level? Can I, as Raizcorp, go and, if I've overpaid tax, also get a refund at a company level?
Absolutely. So remember, we pay our 2 provisional tax payments.
Yeah.
So in August and in February each year.
Yeah.
And if at the end of that financial period, when you've done all your sums and you've calculated whether or not, what the final balance is, if it's seen that you've overpaid, SARS issues you a refund.
Okay, and what are the kind of hoops you'd have to jump through to get that refund?
So the first thing that SARS is going to ask from a business perspective is they want a set of your financial statements.
Yeah.
And then
audited, or?
It depends on, the Companies Act is quite clear on the type of assurance required. For most companies, you just need compiled financials. So it's unaudited, unreviewed.
Okay.
And if your company is big enough and it hits certain thresholds, then you might need an independent review or an audit.
So while we're there, just let's talk about independent review, a set of financials, independent review and audited. Just take us through the three and what sort of, at what threshold?
So there's a thing called the public interest score. And the Companies Act goes on to elaborate, but essentially what it means is it's a score that you calculate based on the creditors within the company, the debtors, the bank balances, the employees, the number of employees you have. So what is the risk to the public on this company failing?
Yes.
So the bigger the company, the bigger the PI score, the bigger the risk to all stakeholders.
Right.
And if a company is less than 100 PI score, you don't need to really do anything. You just need a compilation.
Right.
Anything between 100 to 350.
And so on the compilation, you can do the compilation yourself.
It needs to be an external compilation.
External compilation, right?
If your accountant does your compilation, perfect.
Right.
Anywhere from 100.
No. Your accountant, external accountant.
External accountant, not internal accountant.
Okay, right,
correct.
Right. Okay.
From 100 to 350, you need an independent review.
Okay.
And from 350 and above, you need a statutory audit.
Okay.
Yeah.
Which is a in-depth audit. And from 350, if you're 351 and you're a massive corporate, the same depth of audit?
A statutory audit to statutory audit. So what they seek to do is provide reasonable assurance that these financial statements are correct, and the auditor will come in, and depending on the nature of the business, how it transacts, the controls within the business, they will detect or deduce the amount of testing that they need to do.
Let's come back to the tax refund. So I took you on a little journey there. So now you said that I was provisional player, and now I find that maybe I've overpaid.
So when you file your final tax return, your ITR 14, and you will see what the final tax amount is. You submit on your ITR 14, on e-filing, it's already calculated the amount that you've paid.
Yes.
You put in all the details from your financial statements, and it'll automatically calculate the amount that is refundable to you.
Yes.
When you press submit, SARS is going to do their checks, and if for whatever reason there's some metrics that fall outside of that kind of red flag you, then they'll proceed with some type of verification or audit. If there's no metrics that land you in kind of like a questionable situation, I think they refund you within a couple of days.
Okay.
Yeah.
Without interest.
Without interest.
Okay.
But interest at SARS only works one way.
Yes, it only works one way. I just want to mention that, so no one's expecting interest. And so on that, what happens now if it is questionable? They come in and it takes 6 months or a year, and you deem to be okay.
Yeah,
you're fine. They still don't pay you interest.
They won't pay you interest. As long as there's an open audit or verification, they won't pay you interest. But it shouldn't take that long, really.
Yeah.
So why we find it takes long in many instances is firstly, the tax practitioner is not submitting the correct information to SARS.
Yeah.
So SARS is asking for something, but they're not receiving what they're asking for.
Yeah.
And now they're not going to tell you. They're not going to be like, hey, Allon, listen, I need this information.
Yeah.
They're like, okay, if you don't submit it, we'll just kick the can down the road and we'll just keep you guessing.
Yeah.
But in instances we found, provided that we understand what SARS is asking and we submit the information timeously, we really haven't had a problem getting refunds from them.
Because that's what I've understood now, that in terms of, exposed to a lot of businesses, that when we've had a bad accountant, generally when you go in and say, but what's happening? And they literally have not had the documentation to submit, and it affects cash flow, obviously the interest cost to you, because you could have had that money in your bank as well. So, it's worthwhile getting everything in order.
Absolutely. And there are options available to taxpayers. So if you're playing your part and you're submitting the information to SARS and they're not playing their part, then we escalate the matter to the Office of the Commissioner or the Tax Ombudsman. And we've been highly successful in that approach. Ultimately, we want the matter to close so that our taxpayer or our client can get their refunds back. But also, we don't want constantly all these open audits sitting on your tax profile, because it really just flags you as a bad taxpayer.
All right. So you heard it there from George Diab. He's the CEO of Gas Accounting. You heard it from him. Do your tax properly. And we all don't like to pay tax. We feel that maybe that money is better spent in developing our business to grow it. But it's a reality all over the world. It's a reality for you and I. Tax is not your money. It's SARS's money. You are just an agent of that money, and you need to treat it with respect. That's it for today's show. Do remember, if you think it, write it down and make it a reality.
MTN SME Hub, link to business success.